You're watching Silver News Daily. Subscribe for more.
Did you know silver could skyrocket past $100 an ounce? And it's not just a wild guess. Experts are pointing to a brewing global debt crisis, a collapsing dollar, and skyrocketing industrial demand as the perfect storm driving silver to unprecedented highs. Think this sounds too good to be true? Well, stick around, because we're breaking down why this hidden opportunity could redefine your financial future.
Yes and yes. So actually, I haven't heard anybody use such a conservative price assumption as you just mentioned for a long time. I remember, never mind. We won't go too far down memory lane. But no, people are using, okay. So the industry convention is that the 3-year trailing average is a reasonable price assumption for monetary metals, for gold and silver. And remember, these have such concentrated value that your payback on a mine, a good mine should be 2 years, no more, 3 maybe. So using a 3-year trailing average, if your project works and works well with, with that 3-year trailing average and your payback is within 2 to 3 years, that makes sense. There's a logic for that, why we choose these numbers. Now, in a rising environment, I don't like to call it the gold price. I call it the gold dollar exchange rate because gold is money and I see it as a Forex question. But anyway, if we're in a rising environment, then a 3-year trailing average, you're averaging in lower prices. So that's very conservative. But really, since the spike in 2020, before 2024, gold was kind of sideways for those years with volatility. So if a year ago, in January of 24, before the latest hockey stick, you used a 3-year trailing price, it would actually be pretty close to spot. That wouldn't really be very conservative. You hear what I'm saying?
Yes. Yeah.
You're not building in those lower prices into your average. The worst, of course, scenario is we haven't seen this for a while, but I kid you not, I remember this. When gold is declining and you use the 3-year trailing average, you get an average price that's way above current spot, and that obviously is a ludicrous thing to use. Any serious operator will discount spot. They're not going to give you a price that you can't actually get in the market today. And if you see a feasibility study that has something like that above market, not just gold in any metal, like these, lithium or nickel or some of these others that have fluctuated so much.
Imagine if banks across the globe suddenly started scrambling to stockpile silver. That's exactly what's happening thanks to the Basel III reforms. These regulations have reclassified physical silver and gold as Tier 1 assets, the safest and most reliable financial reserves. And here's the kicker. This shift means banks now treat silver as valuable as cash. So what does this mean for prices? Well, as banks pivot away from risky paper silver and toward physical bullion, demand could surge, and with limited supply, you can guess what happens next. Could this regulatory shakeup be the catalyst that sends silver soaring past $100? We're only scratching the surface here, so stay tuned.
Beware of this thing. Beware of a price assumption that's not real today. That's the bare, minimum requirement. So, right now we're in a rising price environment again. So that 3-year average is looking conservative again. But it's been 1 year. We just had a hockey stick. Would a correction be possible? I just mentioned that we could hit 3,000. I don't think that's that far out there. But we also saw gold wobble when Trump won.
Yes.
And the wrong outcomes here, as long as the world thinks that if the Fed's going to hike rates, that's going to be bad for gold. The wrong news could actually send gold down into correction mode again. So if you're looking at an assumption that looked conservative 6 months ago, it may not be 6 months from now. All of which is to say, sorry, just, this isn't it's not rocket science. It's just rock science, right? Just look at that assumption and make sure that your price assumption is reasonable. And one more quick thing, I didn't mean to go down due diligence university here, but that gold price assumption or copper or whatever it is, it's very important. The other things, the metallurgical recovery rates, these are all set by engineering studies. So unless they're lying, they're probably right. But there is another big assumption that you just arbitrarily set, and that's the discount rate. If you say, oh, well, the industry typically in mining, they'll use a 5% discount rate on that net present value calculation. And it's what everybody does, so I hold my nose. But really, mining is so risky that that's the minimum. And if you've got a project in, Ebola Central, then 8 or 10% would be a better discount rate. So watch out for that discount rate. If you've got a project that's in a risky area, there's political risk, safety risk, medical risk, currency risk, whatever, then that 5% is probably not a reasonable discount rate. So, and a lot of people don't pay attention to that. So watch for that one to sneak up on you. It'll give you a number that's better than it deserves to be.
Did you know that silver isn't just for jewelry or coins? It's the unsung hero powering the modern world. From the solar panels driving the renewable energy revolution to the microchips in your favorite gadgets, silver is essential. And here's the catch. Demand for these technologies is exploding. For example, silver's use in solar panels alone has skyrocketed as countries race to meet renewable energy targets. Add to that its role in electric vehicles, medical devices, and 5G infrastructure, and you're looking at a metal in more demand than ever before. But with global reserves shrinking, how long can supply keep up with this industrial frenzy? And could this unprecedented demand be the spark that pushes silver prices past $100? Keep watching. We're just getting started.
Think the conventional wisdom is in our little corner of the market. The conventional wisdom is, oh yeah, when the rising tide will lift all ships. Come the mania phase, all these stocks will go crazy. But guess what? I mean, if $2,800 gold couldn't float all the gold stocks, you got to ask yourself, what will? Now, some people are saying, you're asking, does gold matter anymore? I think we all know, and the audience knows, yes, it does. But there's a harder question to ask is, are the gold stocks still a good speculation? And if you look at the GDX, right, the big gold ETF of gold stocks, it moved about the same as gold in 2024, give or take 1% or 2%, right? What's the point? Why would you take the risk of buying these, as Doug Casey used to call them, these crappy choo-choo train industry mining stocks, 19th century stuff? Why would you buy that if you're not getting any leverage to the metal? If you're only going to make as much money as gold itself, I take that risk. I think this is a serious question that, gold enthusiasts and silver, really any other commodity, but particularly monetary metals enthusiasts should think about. And my answer here is don't give up. Don't throw out the baby with the bathwater. The message of 2024 is not that gold stocks are dead. If you look, like we talked about the GDX, and I'm almost done here. Let you.
No, I'm enjoying this discussion.
Okay, so we look at the lesson. Like the GDX, just barely kept up with gold, but in there we had some majors that had serious trouble, political risk, mine confiscations, 240 tons of gold confiscated. You know who I'm talking about, right? And we had others disappoint, and then we had the more quality operations really deliver in spades. And those guys, they're sitting at 52-week, if not multi-year highs. So here's the takeaway. Here's the lesson. The data, the reality, never mind our ideology. The lesson of 2024 is that we had a stock pickers market. It was not a rising tide lifts all ships, even with gold going from 2,000 to 2,800. Maybe 3,000, a nice big round number like that this year. I think that's easily doable. Maybe that will get the excitement going. But the most recent data we have from 2024 says, don't assume that. That doesn't mean give up. It does mean you need to be a stock picker. You need to focus on quality. You need to focus on the people that are actually delivering the goods. And that covers exploration and development as well as production. Where do you want to go from there, Dunnigan?
While demand for silver is soaring in industries like renewable energy and electronics, there's one massive problem. We're running out of it. Silver isn't as abundant as you might think. In fact, global silver reserves have been steadily declining, and mining companies are facing increasing challenges extracting it from the earth. Here's why. Most of the silver we use today isn't even mined directly. Over 70% of global silver production comes as a byproduct of mining other metals like copper, lead, and zinc. So when demand for those metals dips, as it often does during economic slowdowns, silver production slows right along with it. Now add to this the fact that silver recycling is nowhere near enough to meet growing demand. Unlike gold, much of the silver used in industrial applications is lost forever, buried in landfills or scattered in tiny amounts across countless devices. In other words, we're consuming silver far faster than we can replace it. Here's a number to put it in perspective. Global silver mine production has been relatively flat over the last decade, But industrial demand is expected to jump by nearly 15% in just the next few years, with supply already stretched thin. What happens when demand skyrockets even further? This tight supply-demand balance could act like a spring, coiling tighter and tighter until prices explode past $100. Could we be on the verge of a historic silver squeeze? Stick around. There's even more to uncover.
Let's have a bit of context here. I mean, there's places like with Rick's comment, South Africa, Russia, they're enfants terribles on the world stage. They're persona non grata. On the other hand, the supply from both countries has never varied in my entire career. That story about, South Africa could blow up at a moment's notice. Now, mind you, I'm not saying rush out and buy South Africa plays. I'm just saying that the supply of metals has never been disrupted, not significantly, not for any length of time. And even with, this isn't just a little border skirmish, even with a substantial hot war in Europe with Russia, and a quasi-European EU ally, the metals haven't stopped flowing from Russia. Yeah, there's sanctions and there's issues, but they just sell it to the Chinese, and then the Chinese don't buy it from somewhere else. It's all fungible. So the flow of metals has not been interrupted for the decades that I've been in the business, despite that. So I don't think that's the way, or that's not a very useful way to look at it. The way I look at it is, here's to quote Rick Rule that you brought up. Like he says, don't confuse the inevitable with the imminent. So maybe it's inevitable that at some point South Africa breaks down and the mining output just drops through the floor. Doesn't mean it's imminent. And if I had made that confusion at any time in my career, I would have been wrong every year. Right? So here's how I look at it. Forget about inevitable. Don't even tell me what's imminent. I want to know what's happening right now. And if right now you've got a coup d'etat that's 3 months old, or you've got a country that's gone through 3 coups d'etats in the last 5 years, that is a political risk issue. That's not theoretical. It's not around the corner. That is a reality now. And by the way, even if the junta comes in and says, it's just the French, we're kicking the evil French out of our African country, that's what they say. That doesn't make it true. And you never know what they'll decide the next day or the next week or the next month. Even if they say, hey, we like mining, we get it. We are a poor country.
Now let's talk about one of the biggest drivers behind silver's skyrocketing potential: inflation and the global debt crisis. The world's total debt has surpassed a staggering $130 trillion, and the United States alone is carrying over $37 trillion in national debt. Historically, when debt reaches unsustainable levels, governments resort to a familiar playbook: printing more money. But what does that do? It weakens currencies like the US dollar and fuels inflation. Here's where silver comes in. Unlike paper money, silver is a tangible asset that can't be printed into existence. That makes it a safe haven for investors during times of economic uncertainty. Right now, inflation is eroding purchasing power, with many major economies struggling to bring it back under control. Central banks are facing a tightrope act: raise interest rates too much, and they risk economic collapse. Lower them, and inflation could spiral out of control. Historically, during times of high inflation, silver prices have surged as people flock to it as a hedge against devaluing currency. And we've seen this play out recently. In 2024 alone, silver prices rose over 25%, driven by rising fears of a financial crisis. But here's the twist. As inflation persists and central banks run out of options, investors aren't just hedging. They're preparing for an entirely new monetary reality where precious metals like silver take center stage. Could silver's historical role as a safe haven become even more critical in a world drowning in debt and inflation? If history is any guide, we might only be at the beginning of this surge. But don't go anywhere, because what's happening with the dollar might push silver even higher.
To have lots of mining to pay for building new schools and roads and all this stuff. So, carry on. Life is normal. No concessions will be torn up and reconsidered. Just carry on. We love mining. Even if they say that, A, it doesn't mean it's true. B, it doesn't mean the guy who won the coup doesn't get shot by his colonel and taken over by somebody else. And see, they renegotiate these things all the time. It's like Darth Vader in the second movie when he tells Lando Calrissian, "Pray I don't alter our agreement any further." Right? You know, they've got the guns, they've got the army, and you've got a mind that you can't just take up and move somewhere else, right? So who's going to win that negotiation? So, yeah, this is my view. You know, Rick Rule says it doesn't matter the color of the skin of the person who steals your money. He's right. But when there's been a coup d'etat or there's active fighting in an area, there's clearly elevated risk there. And I think that's a reasonable thing to say. My other mentor, Doug Casey, likes to say that you can run, but you can't hide, you know, and then suddenly they decide to raise the taxes in Quebec or Ontario or something. Mm-hmm. That does happen too. I get that. But, you know, Ontario is not Ebola central either. Right? There is a difference in the risk level here. So the takeaway here is if there is a place that is seeing upheaval now, that is very relevant to your investment decisions, right? It's not always a coup. Like in Ecuador a couple of years ago, the entire government fled the capital because of social unrest, right? That's scary. That's the sort of thing that upsets the rule of law. And mines, by their nature, but even a factory, you could build another factory and retool if you had to. You can't take your mine with you if you flee the country, right? You either mine it or you don't. It's a resource in the ground. So mining is very, very vulnerable to political risk. It's something that I take very seriously and I assiduously avoid. Just to be very specific, for example, I eliminated when it was clear that Scheinbaum was coming in Mexico, I eliminated all financial risk exposure to Mexico from my portfolio. And maybe that was extreme, maybe it's premature, maybe she's sounding more pro-business, we'll see what happens. But, you know, given the track record of places like that and, you know, given her pedigree, I mean, she's an environmentalist, right? I just got out of harm's way. So that's how seriously I take this sort of thing.
Now let's focus on the US dollar, the backbone of the global financial system, but one that's showing cracks under the weight of soaring debt. As the U.S. government's debt spirals past $37 trillion, the dollar is under increasing pressure. Historically, when debt becomes this unsustainable, countries resort to devaluing their currencies. It's an economic playbook that erodes savings but benefits assets like silver, which thrive when the dollar weakens. Here's why this matters. Silver, like gold, is priced in U.S. dollars. So when the dollar weakens, silver becomes cheaper for international buyers, driving up demand globally. And make no mistake, the dollar is losing its strength. In fact, analysts predict 2025 will see further dollar devaluation, fueled by rising inflation, a cooling economy, and the Federal Reserve's inability to raise interest rates without triggering a recession. And it's not just inflation at play here. It's also geopolitics. Countries like China and Russia are actively working to reduce their reliance on the U.S. dollar for global trade, opting instead to diversify into assets like gold and silver. This de-dollarization trend is pushing even more demand towards silver as nations seek alternative stores of value. But let's not forget one critical piece of the puzzle. A weaker dollar doesn't just help silver, it could send prices skyrocketing. As investors lose faith in fiat currencies, silver's dual role as a hedge against inflation and a physical, tangible asset becomes impossible to ignore. So the question is, with the dollar losing its dominance, could silver become the ultimate alternative for wealth preservation? The answer might be closer than you think. Stay tuned, because the geopolitical and financial shifts we're witnessing are just the tip of the iceberg.
You know, the obvious answer is by the royalty companies, you know. Though, you know, a single asset developer that goes into production, it's going to give you much more of a hockey stick type result on average than a royalty with a portfolio of different things. Though on the flip side, you know, even a really big deal like a royalty company we all know and love that lost, what was it, 16, 17% of its revenue when Panama went bonkers?
Yep.
Right? You know, in that case, if you're a single mine operator and that's your asset, you're toast. Whereas the royalty company can roll with it. So I'm not just saying suck it up and buy royalty companies. I mean, but there are certainly arguments for that. But there's thresholds. And the royalties go into your feasibility study. And if you have a very heavy royalty burden, that's a big problem, especially for big bulk tonnage mines. These are These are mines that don't have huge margins, but make it up on volume. And the royalty is really difficult to get there. Back in the day, Highcroft, I remember, had like 7% royalties added up over different things. And for a big low grade mine, that didn't even get off the ground until they bought back some of those royalties, which is part two of the answer is a lot of these royalties have buyback provisions. And usually you can't buy it all back, but you can buy half of it back for, X million or whatever. And if you're going into production at that point, you've raised your CapEx, right? You've got the money. That makes sense. So I wouldn't throw out the baby with the bathwater here. I would look at the specifics of the royalties. Anything 1 to 2% range for a good project, it's usually manageable. Above 2, 3, you're starting to get into question marks. You need to see how that impacts the IRR, the internal rate of return of these projects. Can I tell you a dad joke since we're talking dad stuff on camera?
Geopolitical turmoil is shaking markets across the globe, and when the world is on edge, silver historically shines. From regional conflicts to economic rivalries, instability creates uncertainty, and uncertainty drives investors toward safe haven assets like silver. Take the ongoing Russia-Ukraine conflict, for example. It's disrupted supply chains, driven up inflation, and destabilized markets. In times like this, silver's value as both a financial hedge and a critical industrial metal comes into sharper focus. And it's not just one region, it's global. Rising tensions in the Middle East, trade disputes between the U.S. and China, and even the political instability within major economies are creating a perfect storm of uncertainty. Here's a fact that might surprise you. During periods of heightened geopolitical risk, silver often outpaces even gold in terms of price gains. Why? Silver's dual role. As an industrial metal, it benefits from continued production demand, even during crises. But as a monetary asset, it also serves as a hedge against volatility and currency instability, much like gold. And let's not forget about central banks. Geopolitical risks often prompt nations to rethink their reserves. Emerging markets, in particular, are increasing their holdings in precious metals to reduce dependence on the U.S. dollar. While gold is the usual go-to, silver is steadily gaining traction as a complementary asset. Could these ongoing conflicts and growing distrust in traditional currencies be a spark that sends silver prices soaring past $100? History suggests that when the world is on shaky ground, silver becomes an anchor. But we're far from done unpacking this story. Next, we'll see why silver might outperform its closest rival, gold.
Gold again. And by the way, all three correlate pretty well, so this isn't a huge difference. It's just interesting when it gets closer to copper than to gold. But silver is still money. I dislike the term the poor man's gold, but there is something to that. And there is, in the same way, in China, they have this huge affinity for gold. There are other countries where people have the same thing for silver. So it's not only an industrial metal anymore. Not anymore. It is not only an industrial metal. It hasn't gone whole hog in that direction. But yes, if we see a major economic downturn and industrial demand for solar panels and other such uses goes down, then that would subtract demand from silver that gold doesn't care about. So that is a downside. My answer to that would be that there's no way that the powers that be will let that happen. If it starts to happen, the money helicopters, they're already up there. They never really stopped flying since the shutdowns, but they'll send out more. So I just don't think they'll allow that to happen. If you had, the kind of multi-year depression with soup lines around the block and all that stuff, sure, that would weigh much more heavily on silver's industrial aspect. But I don't think that'll happen. The flip side, though, the good news for silver bulls is that I see silver as a win-win metal. It is still money. It does still track gold. So if you've got scary circumstances like the viewer is asking about, then that makes the monetary safe haven demand go up. At the same time, though, the silver is a byproduct. It's not just an industrial metal. It's produced as a byproduct from industrial metals mines. The single largest source is copper mines, these great big porphyry copper mines. If you combine lead and zinc, more comes from lead and zinc mines. But anyway, from these are industrial metals. And even your pure silver mine, it's really usually a lead mine with kilos of ton per silver versus a percents of lead. So the silver is just worth so much more. We call it a silver mine. But I'm not aware of any mine that produces pure silver. It's just mostly silver. Anyway, the point though is, if you've got a circumstance like the viewer is asking about, where economically scary safe haven demand is driving up the monetary demand for silver, but the same thing is shutting down your copper mines and your lead zinc mines because we're worried about the economy, well, you'll have demand going up while supply is going down. This is what happened in 2010 after the GFC, when silver went up to almost $50. And for different reasons, it's what happened, the Hunt brothers, when they tried to corner the market. You had monetary metals demand sending gold and silver up, and you had the fear, at least, of a supply squeeze, of a cornering of the silver market. And so you had those two constraints are the two times that silver has gone to $50. So I'm not predicting this. I'm just saying, the circumstance the viewer asks about could actually be the very thing that sends silver on its next little mini mania, where it just goes on a tear way ahead of even gold.
When it comes to precious metals, gold often steals the spotlight, but silver may actually be the better bet right now. Why? It all comes down to its dual role as both an industrial and monetary asset, giving it a unique advantage over gold. First, let's talk about price potential. Historically, the gold-to-silver ratio, how many ounces of silver it takes to buy 1 ounce of gold, averages around 60:1. Right now, it's hovering well above that, suggesting silver is heavily undervalued compared to gold. This imbalance means silver has far more room to run if market dynamics shift. Now consider accessibility. Silver is often referred to as the poor man's gold. Its lower price point makes it more accessible to retail investors, particularly during times of economic uncertainty, when people are looking for affordable ways to hedge against inflation. But as demand from both investors and industries grows, this so-called affordable metal could see its price surge. Here's another key difference: industrial demand. While gold is primarily a store of value, silver plays a critical role in technology and manufacturing, from solar panels to electric vehicles. With the green energy revolution gaining momentum and governments investing billions into renewables, silver's industrial demand is set to explode. Gold simply doesn't have this dual demand to the same extent. And don't overlook market size. The silver market is much smaller than gold's, meaning it's more volatile. While this can lead to sharper price drops, it also means silver can skyrocket much faster when demand spikes. It's this volatility that makes silver especially exciting for investors looking to capitalize on big moves. So, could silver not only close the gap with gold, but actually outperform it in the coming years? The evidence is stacking up, and as we've seen before, when the conditions align, silver has the power to outshine even the most precious of metals. But there's even more to this story. Next, we'll uncover the growing role of central banks in fueling silver's rise.
Tendrils in those markets than I do, but from my travels in these countries, my perception is that the Chinese affinity for gold, and really much gold, if not uniquely or only, but mostly gold, it's somewhat unique. But you go through China and everything is decorated in red and gold. You don't see silver, right? That's not, if it's auspicious, if you want to show wealth and high class, it's red and gold everywhere. In other countries, silver is still, it is still seen as money. The plata, silver in Spanish, that is the slang for money. If in any Spanish-speaking country, if you say, oh, I'm broke, you say, no tengo plata, I'm out of silver. So it's still there. And in India, it is still very visible in the Indian market. You'll see when gold gets way ahead of itself, you'll see more buying switch to silver. For the average Indian person, maybe not the banker, maybe not the CEO, but the average person out there who wants to save a little bit and in real, wealth, you'll see that there is substitution between silver and gold as their prices fluctuate on the markets. So, and that's with China's birth rate rolling over, that's arguably the most important demographic trend in the world for those people to still see silver as money. Clearly Latin America, my example with plata, but by the way, in French, the word for money is argent, silver.
Mm-hmm.
So this is not unique. And I myself have actually argued for, if or when gold goes back into circulation and money. I have raised the question that it doesn't necessarily mean that silver will go back into circulation as money, because you don't need it anymore to make change the way we did before. I mean, I don't, if or when gold goes back into circulation as money in the 21st century, I don't think we're going to go around with medieval coin purses full, clinking at our belts. We will own it and we will transfer it electronically, whether blockchain or otherwise. If you're doing that, you don't need silver to make change. And you certainly don't need copper pennies to make change for the silver, right? So even though I have said that, and, hence my Darth Silver nickname, it's still, that doesn't actually exist yet. I'm saying I can see that happening in the future. Like right now, if the internet goes down, if there's an EMP, right, if World War III happens and you need to transact real value, it's gold and silver. Your Bitcoin ain't going to help you in that kind of environment, and heaven forbid we go down that path. But I'm just saying that right now, the monetary metals are still what they are and have been for millennia.
Did you know central banks are playing a pivotal role in reshaping the silver market? For over a decade, central banks have been net buyers of precious metals, stockpiling gold to reduce reliance on the U.S. dollar. But now silver is quietly entering the picture as a strategic asset with growing appeal. While gold has been the traditional reserve of choice, silver's unique properties as both a monetary metal and an industrial powerhouse make it increasingly attractive. Take emerging markets like China, India, and Russia. They've been ramping up their precious metals reserves to hedge against geopolitical risks and currency volatility. As these nations diversify away from the dollar, silver is benefiting from a spillover effect. And it's not just about reserves. Central banks' policies are influencing silver prices indirectly as well. For instance, lower interest rates and dovish monetary stances tend to weaken the dollar, making silver more affordable to global buyers. At the same time, Basel III reforms are pushing financial institutions to favor physical metals like silver over paper assets, driving up demand. Consider this. In 2024, central banks' gold purchases reached record highs, fueling a surge in gold prices. But as gold becomes pricier and less accessible, could silver step in as the next best alternative? Analysts believe that sustained central bank demand, coupled with silver's undervaluation, could be a major catalyst for prices. What we're witnessing is a potential paradigm shift, one where silver, long overshadowed by gold, could emerge as a critical reserve asset for nations navigating uncertain economic waters. The question is, will central banks' growing influence push silver beyond $100? Stick around, because next, we're diving into the frenzy of retail and institutional investors fueling silver's meteoric rise. So, could silver not only close the gap with gold, but actually outperform it in the coming years? The evidence is stacking up, and as we've seen before, when the conditions align, silver has the power to outshine even the most precious of metals. But there's even more to this story. Next, we'll uncover the growing role of central banks in fueling silver's rise.
This is a real, risk, hot potato going forward, looking ahead, because there's no doubt. I mean, China basically is out to conquer the world economically rather than with bayonets. It's a much more efficient way to go about it. But you see them, spending billions of dollars to build roads in African countries. And what do they get for that? Suddenly mineral licenses and concessions come flowing very easily towards Beijing instead of towards Western tenders. In some countries, you can even have previous concessions taken back after the coup, and then suddenly they go to China. Well, why is that? Well, China basically is buying its way in. I'm not saying this approvingly. I'm only saying it's better than sending armies. I'm not saying I think this is necessarily a wonderful thing, but as a realist, looking at the world and the cards that were dealt, it doesn't do us any good to wish we had 4 aces. We got to look at the cards we have and what the other players are doing. So you're absolutely right about this. My hope, well, I am more hopeful now than I have been for a while, and it's not just because of the U.S. election, and I'm not just trying to paint Trump as a hero here. I have huge disagreements with Trump. I don't have a MAGA hat. Sorry, guys. But he does have a pro-business agenda, and he does seem to be, even if it's just for political reasons. Let's say he was secretly woke, but he knew his voters were anti-woke, so he's going to be anti-woke. Now, I don't think that. But hear what I'm saying. I'm saying that his agenda, I think, is more reality oriented, and I think that is a very good thing. But all of which was actually to say, I don't think Trump is the most important thing. I think for the global stage, the fact that the BRICS tend to be so pragmatic, that's huge. And you can say, oh, well, that's the BRICS and they're getting ahead and the West is falling behind. Yeah, well, how far behind is the West going to fall before they decide to, hey, we need to change something? And another thing to be hopeful in, despite the war in Ukraine is, and I have traveled extensively in Eastern Europe, and I've met a lot of people there. I have a lot of former students there. And these are very pragmatically minded people. They're not necessarily, libertarians or anarcho-capitalists or people like Doug Casey or me or whatever. They're very pragmatic. They want to get ahead and they want to know what works. And they don't want to hear about socialism, libertarianism, capitalism. They don't want any ism. They just want to know, what is good business? How do I raise money? What's a good business plan? How do I get ahead? What are the practical steps? I think this is enormously helpful. And it may well be that, Poland, maybe even Ukraine after the war, but for now, places like Poland and other centers of really entrepreneurial, practical, go-getter kind of energy in Eastern Europe could help drag the EU back towards reality. There is a backlash in the US now, I think, back towards reality. And arguably, this is around the world. We're seeing, I don't want to declare premature victory here, but we're seeing backlash against some, let's be charitable, and let's just say some naively optimistic and unrealistic social and economic agendas that we've been having to struggle with. So I'm not saying it's all over and it's all, a bed of roses now, Dunnigan, but I am saying that, it just seems so hopeless for so long. The world is just going the wrong direction. And now there's pushback. Not one place, just around the world. And I think I do find some hope in that.
The silver market isn't just being shaped by central banks. Retail and institutional investors are fueling a frenzy unlike anything we've seen in years. From silver ETF to physical bullion, everyone is piling into this once overlooked asset. But what's driving this mania? And why now? Let's start with ETF. Exchange-traded funds backed by silver have seen massive inflows over the past 2 years. In fact, 2024 set records for silver ETF demand, as investors scrambled to hedge against inflation and economic uncertainty. These funds are an easy way to gain exposure to silver without owning physical metal, making them a go-to option for both retail traders and large institutions. But here's the kicker. Every ounce purchased by an ETF removes that silver from the available supply, creating even tighter market conditions. Now let's talk about physical bullion. Retail investors, spurred by fears of inflation and a collapsing dollar, are buying up coins and bars at unprecedented rates. Many see silver as the everyman's gold, an affordable way to protect wealth and preserve purchasing power. This surge in demand has even led to shortages, with premiums on silver products reaching historic highs. And institutional investors aren't sitting on the sidelines either. Hedge funds and asset managers are increasingly turning to silver as a tactical play, with silver's relatively small market size. Even modest increases in institutional buying can send prices skyrocketing. Here's a striking example: the 2021 silver squeeze, when a social media-driven campaign pushed prices to an 8-year high almost overnight. While that rally was short-lived, it proved one thing: when silver catches investors' attention, it moves fast. With both retail and institutional buyers flooding the market, silver is on a trajectory that could easily see it breaking the $100 barrier. But what's adding even more fuel to this fire? the renewable energy revolution. Stick with us because next, we'll show how green energy could make silver the metal of the future.
But okay, but I'm not trying to be facetious here. I mean, it's important that, I mean, every year somebody's convinced there's going to be a market crash. And, no, I'm not going to name names. And they've only been right, arguably in 2008 and 2020. And they've been wrong every other year that I've been in this business. So, that's just a fact. Take that sort of thing with a grain of salt. The other thing is, don't forget fiscal dominance. We talked about that before. Bad news is good news. The Fed has trained investors to treat bad news as good news. So you could have some legitimately bad news, the kind of thing that should make investors flee Wall Street. And instead they could just pile in because they're, oh, that's it. Powell's going to come riding into the rescue now. He's got to, no choice, right? In fact, that's what happened in 2020, not just Powell, but the powers that be around the world. That should have, should, other things being equal, absent any government intervention, that would have been a market crash,
Silver isn't just a financial asset. It's the backbone of the renewable energy revolution. As countries double down on clean energy initiatives, silver is becoming an indispensable resource, and demand is skyrocketing as a result. Take solar panels, for instance. Did you know that silver is a critical component in photovoltaic cells, which are at the heart of solar technology? In fact, the solar industry alone accounts for nearly 10% of global silver consumption. And with governments worldwide pouring billions into renewable energy projects to meet climate goals, this figure is set to rise dramatically. The International Energy Agency predicts solar installations will grow by 15-20% annually over the next decade, which means one thing: silver demand is about to explode. But it doesn't stop there. Silver is also key in electric vehicles, EVs, another cornerstone of the green revolution. EV requires silver for the wiring, batteries, and advanced electronics. With automakers ramping up production to meet surging demand, silver's role in this industry is only expanding. Here's the challenge. Industrial demand is rising at a pace that mining simply can't keep up with. Unlike other metals, silver has no viable substitute in many of its applications. This imbalance between supply and demand creates a perfect storm for higher prices. Add to that silver's critical role in other green tech innovations, like 5G networks and energy storage systems, and you can see why some analysts are calling it the metal of the future. So how high could prices climb as the renewable energy revolution accelerates? Could silver's unique role in the green economy be the key to breaking that elusive $100 threshold? Stick with us because next, we're looking back at history to see what past silver surges can teach us about where it's headed.
But the intervention was beyond the imagination of going beyond the record. It's like they had to break the charts and then break the room the charts were in to look at all the money printing and the amount of money, just checks just sent straight to the people's mailboxes and stuff. Just crazy stuff. So you got to ask yourself, is the administration here or whoever wins the election in France or in Germany or in Korea, South Korea, is any of these new politicians going to want to have the ship go down on their watch? No, they're going to pull out the stops, no matter how many money helicopters it takes if things start looking bad. So please hear me, dear audience. I'm not saying it's safe and there's no chance there's going to be a market crash. I'm just saying every year it gets predicted and most years it doesn't happen, and that we can see pathways, ways and means, if you will, money helicopters and whatnot, that could prevent this from happening. Like, it deserves to fall. As Nietzsche might say, the object that's on, it deserves to be pushed, but that doesn't mean it will. And if you bet the farm that it's going to, you could end up losing the family farm when you need it most.
Silver has a history of making explosive moves during times of economic uncertainty. And if history is any guide, we could be on the brink of another massive surge. Let's look back at some of silver's most dramatic runs to see how today's conditions stack up. Take the 1970s, for example. During a decade of runaway inflation and geopolitical instability, silver prices skyrocketed from $1.39 an ounce in 1971 to nearly $1.50 by 1988, jaw-dropping 3,500% increase. Why? Investors sought refuge from a weakening dollar and soaring inflation, much like what we're seeing today. Fast forward to 2011, when silver prices reached $1.49 again during the aftermath of the 2008 financial crisis. Back then, unprecedented central bank stimulus and fears of economic collapse pushed investors toward precious metals. Now think about the parallels. We're once again seeing massive central bank intervention, rising geopolitical tensions, and inflation that remains stubbornly high. But here's what makes today's situation even more unique. Unlike previous silver surges, we're also dealing with exploding industrial demand from green technologies like solar panels and EV. This dual pressure, investor demand for silver as a safe haven and industrial demand from a booming green economy, creates conditions unlike anything we've seen before. Historically, when silver moves, it moves fast, and with the current market dynamics, many analysts believe we could see a rally that dwarfs past surges. Could this be the moment silver finally breaks the $100 barrier? The pieces of the puzzle are all coming together, but the story isn't over yet. Stick with us as we pull it all together and reveal why $100 silver isn't just possible. It might be inevitable.
That's true. Well, it's historically cheaper than gold is in the current context. And I haven't done the math recently, but the last time I used CPI, yes, I know the CPI is nonsense, but if you use the CPI to adjust for inflation, then the other side can't say, oh, you're making up some tinfoil hat number. Like, you use their number and they can't criticize it. And it establishes a sort of floor, right? So if that's the most optimistic case from, adjusting by CPI, a real all-time high, real is maybe the wrong word here, I'm stumbling over it, but a CPI adjusted all-time high in silver would be over $200 an ounce, whereas it's only 3,500 for gold. So gold is much closer to an inflation adjusted high than silver is on that basis. Yes, silver is cheap. If you look at silver's average price over the last 70 years, even adjusted for inflation, it's not scraping the bottom. So I can't call it an absolute bargain. I can just say that, yeah, I see more upside in silver if we're going to hit new real highs. But that is an if. We do have this increased industrial side to silver. So it's not a guaranteed thing that silver will more than catch up with gold, as it always has in the last. Everybody likes to say that silver lags at first and then it more than catches up. Well, that was true until 2020. Like, every gold silver bull market until then, silver lagged at first, and then it more than caught up on a percentage gain basis. That didn't happen in that big breakout for gold in 2020, and silver never really caught up. Or let's put it this way, gold hit new nominal all-time highs in 2020. We're still waiting to beat the 1980 or the 2010 highs.
After exploring every angle, soaring industrial demand, a weakening dollar, relentless inflation, and historical precedent, it's clear that silver is at the center of a perfect storm. The question isn't whether silver can reach $100, it's whether the conditions will push it even higher. Think about it. Industrial demand from renewable energy and technology is growing faster than supply can keep up. Central banks are rethinking their reserves, turning to precious metals as they navigate a fragile economic landscape. Meanwhile, geopolitical instability and inflation are driving retail and institutional investors alike towards silver as a safe haven. And let's not forget, history has shown us time and time again that when silver moves, it doesn't just climb, it skyrockets. But what makes today's setup even more compelling is the convergence of all these factors. Silver isn't just a hedge against a weakening financial system. It's a critical resource powering the green revolution. With supply tightening and demand rising from every angle, $100 silver is no longer a far-fetched dream. It's a plausible reality. So what does this mean for you? This could be the investment opportunity of a lifetime, but timing is everything. Whether you're a seasoned investor or just starting to explore precious metals, staying ahead of these trends could make all the difference. If you found this video valuable, don't forget to subscribe for more insights that could transform your financial future. And remember, this is not financial advice. Always do your own research before making any investment decisions. The future of silver is unfolding before our eyes, and it's a story you won't want to miss.
Of course they are. I mean, you can't build a house out of Bitcoin. Even if you made a bunch of money on Bitcoin and can now buy a house with Bitcoin, the house is still made out of wood and brick and copper and all the other things that physically go into it. And I'll go further and say, of course, gold still matters. Gold is still money. Even the international banking system recognizes gold as a tier 1 asset under Basel III. So no, you're not crazy, dear audience. Yes, you're right about your core beliefs. But let me push back a little bit, not to steel man the other side, because that's not me. But let's look at, if reality matters, then we need to look at what reality has been telling us over the last couple of years. So if nothing else, the reality is that if you just sat on your hoard of gold like Smog the Dragon and didn't look at anything else, you did miss a lot of opportunities, some spectacular ones. If you had bullion only, actually the better gold stocks did better than bullion last year. But let's set that aside. If you stuck with gold and gold stocks, or silver and silver stocks, obviously Nvidia did better last year. And my joke about over the weekend is, if you had been the first person to buy the new Trump coin, I don't know, it could have been 100x within an hour or two. I don't know how crazy that went, but I'm not recommending that anybody diversify or buy any of these other things. I'm just pointing out that this is a fact, that anybody that jumped on some of these things early could have made a lot of money. Some people did. Some people got left holding the bag. But there is an opportunity there. And I'm not just being intellectual here and trying to make a counter argument. I'm saying this is the world we're in. And I think we as realists, if we think we're realists, we need to pay attention to that. And let me give you one more takeaway from this. If you look at the lesson of 2024, as a gold butt, right, as a metals and mining kind of hard rock guy, I'm looking at 2024, and we had, at least nominally, all-time high after all-time high in gold going up, and what was it, like 8 all-time peak? One peak's going.
That's just against the U.S. dollar. It's been hitting those for years.